I'm delighted to have with me Hannes Hofmann, Global Head of Family Office Group at Citi Wealth. Hannes, there's a lot of talk about deglobalization. Are family offices becoming less or more global in their investment outlook?
From our experience, we're seeing quite the opposite. To give you an idea, we work with 1,800 family offices around the world. Average net worth about 2.3 billion. These are very sophisticated outfits that manage the wealth for families that often have businesses or had businesses that generated the wealth. And now the family office helps manage their investment assets. What we're actually seeing is that only 20% of families around the world don't have a global linkage. You either have assets in more than one continent, or you have family members in more than one continent, or you've got passports for one or more countries. So with 80% of families having one or more of these things, we're actually seeing that the global mindset is very prevalent around the world. People do think globally in their investments, they think globally in their businesses, they think globally in their family affairs. And it's one of the things that we pride ourselves on, to be able to help cover families 24/7 with the presence of our firm around the world. Families have started asking about safety strategies. And what do I mean with safety strategies? It's saying like, hey, we are a global family. The world is potentially deglobalizing, which is what you said. How should we react? And so families are asking whether they should have secondary office locations, secondary asset locations, second or third passport strategies in order to protect themselves against a world that could potentially make that global lifestyle, that global investing that they're used to, more complicated than it's been in the past.
How does this shift impact their investment strategies?
I think the investment strategies stay the same, right? The investment strategies are strongly global. They're very much oriented towards identifying the best opportunities for capital. On top of the investment strategy is an asset location and mobility strategy, where people are saying, okay, I'll be invested globally, but in order to protect myself against geopolitical risk, should I have my investment assets located in more than one location? Give you an example. Should I have some investment assets in the US? Should I have some assets in Asia? Should I have some assets in the Middle East? So that if something happens that makes it harder for me to access my assets in one location, I can still rely on the funds that I have in some other places.
Moving on to kind of succession planning, how are families approaching succession planning? Are younger generations becoming more involved in investment decisions?
When we ask family offices for what are the priorities that you have in your daily work, the number one priority that families ask for is safety of assets, right? Just making sure that the family stays wealthy. The number two priority is family succession and family cohesion, because what's very important as a family is you're not just the money, right? You really are a family. You're that, with your own distinct culture and family members, of which some are more motivated than others, some are more artistic than others, some work harder than others, and yet they're all family members that have the same blood, that have the same origin. Finding ways to keep families together, to provide a glue, a common culture, so that you don't just prepare the wealth for the family, which is the first goal, right? Make sure the wealth is there for the family. The second goal is then preparing the family for the wealth. You need to make sure that you slowly and thoughtfully expose family members to the true value of assets that they're going to inherit at one point in time. Our studies actually show that usually when wealth is being passed on from one generation to the next, there's a 70% likelihood that the next generation is going to change their advisors. Why? Because, again, different generation, different set of priorities, you feel comfortable with a different style. From the perspective of the bank, who wants to have a multi-generation relationship with a family, a relationship of trust that spans through 50, 60, 70 years, that's what we want. That means we need to acknowledge that when there's a generational change, we need to get to know the next generation well beforehand, so that they don't feel they need to change the advisor. The more we make sure that the next generation knows the advisor, And the more the advisor understands the priorities of the next generation, the more we can make sure that we as a firm are going to maintain a relationship for 50, 60, 70, 100 years with that family.
With trends like inflation, interest rates, and geopolitical tensions, how are family offices adjusting their portfolios?
Over the last 2 years, we've seen family office be very, what we call risk on. So family offices took money out of cash and put it into risk assets. Now, today we're in February, almost March 2025. Looking back 2 years, that was a strategy that worked fantastically well, right? Equity markets had a big rally in 2023, big rally in 2024. So lots of family offices made very good money with that. As we go into 2025, we're continuing to see that bullish outlook, that risk-on outlook. Despite the geopolitical risks we're talking about, many families look at what's going on in the world and they see the glass half full, right? What they are looking at is a Trump administration that seems to be business friendly in the US. They're seeing the potential end to the war in Ukraine that could generate like more certainty and a reconstruction effort in Ukraine. They've seen a regime change in Syria that could lead to a reconstruction effort in Syria and more calm in the Middle East. They've seen the Chinese government try to engage more with the technology entrepreneurs in China in order to help kickstart the Chinese economy. So a lot of our clients actually look at the things that are going on today and they see them on balance as more positive and therefore stay very strongly risk on and invested. They acknowledge that US stocks in particular, and especially the Magnificent Seven, so the big technology stocks, feel very highly valued. And so what we're doing with a lot of our sophisticated family office clients, we're helping them to stay invested, express a risk-on sentiment, but then at the same time overlay protection strategies that give them protection against tail risk scenarios, but things that could go wrong. Because the truth is, in a situation like ours, after 2 years of strong bull markets, there's always something that could go wrong and could sell off.
Hannes, looking ahead, what trends do you foresee shaping the future of family offices over the next few years?
Really, the three big trends are globalization, right? You have to think global. It's a global investment environment. And whether you are in Asia or you're in the Middle East or you're in Latin America, you have to think globally in everything you do. Second trend is professionalization, right? There's no way that you can manage 2.4 billion without having help from very professional players. We're getting more and more calls from sovereign wealth funds, whether it's Abu Dhabi or whether it's Kuwait or whether it's Singapore. Sovereign wealth funds who call us and they say, like, look, we want to work together with family offices. Why do they do that? They know there's a lot of capital, they know there's a long-term outlook, and they're becoming rapidly more professional. So sovereign wealth funds and family offices can now sit on the same side. We know the next generation wants more transparency, they want more technology, they're a lot more in the details. A lot of the next generation of these families, they've worked for investment banks, they've worked for private equity firms because that's part of the training that their families want them to do. So they come back, they run their family's money, but again, with a much more transparent, a much more professional mindset and their own ideas about how their money should be put to work. So those three trends, globalization, professionalization, and handover to the next generation, are going to be very much hallmarks of the family office environment. Deloitte published a study recently where they said by 2035, family offices will manage more money than hedge funds, which is something that we also expect to be the case, and which is why it's so important that family offices are well understood and well serviced by companies like us.
Hannes, thank you for your time.
Thank you, Ali.